Good morning, traders. Today we want to discuss US dollar and FS day or swing trading strategies. US dollar and FS day or swing trading strategies. We are on a monthly chart of the US dollar, Japanese yen currency pair, and we want to discuss US dollar and FS day or swing trading strategies. All right. So what I have been saying to traders is this: the price structure will determine the appropriate strategy that we must deploy. All right. So for the dollar yen currency pair, the price was in a rising channel. You can see, I'm going to color that in the rising channel. From 2013 up to 2015, all right? Here it is, so that's a red channel, you can see on my chart. The price was in that rising channel from 2013 to 2015. What is happening now, the price D below that channel, that red channel. Therefore, using market geometry, we'll measure the width of that channel, and we project it in the direction of the price. So we have our new channel here. I'm going to color it now into orange, that line. Between the red line and the orange line, we have a new channel. So as I explained to you, the price structure will determine the appropriate strategy that we must deploy, okay? So where we are now, the price D below the orange trend line, which is the lower part of our projected channel, and now is retesting it here. But you have to understand that when we are trading the US dollar, Japanese yen, or when we are trading forex, we cannot ignore the economy news. So yesterday, the Federal Reserve has kept the interest rates unchanged, all right? And the expectation is that the US Federal Reserve will put up interest rates in September 2016. You have to understand that the expectation will always influence the decisions that the professionals are making. So because they're expecting the Federal Reserve to put up interest rates, they will be willing to buy the US dollar, against other currencies. So in that case, if they are buying the US dollar against the Japanese yen, we will expect the US dollar yen to go up. But we cannot ignore the price structure. In this case, the price D below the projected channel is now retesting the edge of the channel. All right. So before we can become bullish, the price must return inside the channel, the projected channel. Between the red and the orange line, the price must go back inside that channel before we can consider it bullish. So at this point in time, I will say to traders, if you are desperate to buy, allow the price to go above the level of 106.00. 106.00, priority to bullish signal above 106.00, and priority to bearish signal below 106.00. But as I've already mentioned to you, the expectation will influence the decision that the professionals are making. They want to buy the US dollar on the expectation that the Federal Reserve will put up interest rate in September. But we don't want to ignore the price structure, because sometimes the market is expecting something and something has suddenly happened. Probably, okay? The unemployment rate, all right, may increase, and then here it is, the US dollar going down, though the expectation is that the Federal Reserve will put up interest rates. So the current expectation is to buy the dollar against other currency, but the economy news, all right, can change the dynamics of the market. Talking about, okay, the non-farm employment change, all right, the unemployment rates, all right, those economy news can change the dynamics of our technical setting. So this is the current price structure. It's a rising channel, price out of the first channel. We project it down, the price below the second channel right here. Talking about the US dollar and FSD or swing trading strategies, all right? At this point in time, we can say that we have a bearish trading setup, but we will wait until the end of the month of July, because we are now in July 2016. We'll wait until the market close on Friday. So the market is closed on Friday. We come back on Monday. Okay, if it close below 106.00, prior to bear signal, the market reopen on Monday. It's stupid to rush and buy or sell on Monday. If one is swing trading, the best approach is to wait until Tuesday and see whether one has a bearish trading setup below the level of 106.00. If one is selling the US dollar, Japanese yen at this juncture, one is trading against the market expectation, which means the Federal Reserve will put up interest rate in September. So when we are selling, looking at the price structure, we must be cautious, knowing that the expectation is that the Federal Reserve will put up interest rate in September. All right, it makes sense? Another thing I need to mention to traders, talking about US dollar and FSD or swing trading strategies. All right. You can see here that I put my Fibonacci retracement line from this point where my cursor is all the way up here. And I want to highlight to traders the 50% Fibonacci retracement level. And I will color it into dark green, all right? Oops, it doesn't show up very clearly. That's why I use pink more, because you can see really here. So here it is. That's the 50% Fibonacci retracement level of the price action since the end of 2012 up to the beginning of 2015. That's the trending phase that is confined in this red rising channel, okay? And the 50% is there. So generally, there are investors that always buy between the 50% and the 61.8% level. So if you have been using Fibonacci retracement for some time, remember that there are investors that usually buy between the 50% and the 60% zone. This is what we call the sweet spot zone. So price goes up from A to B and then pull back between the 50% and 61.8% level. There are buyers in that zone. So I'm just pointing that out to you because the price retesting is now looking bearish, but we are also on top of the 50% and 61.8% sweet spot zone. That's what I'm saying to you. If you are selling here, you are trading against the market expectation, and you are also trading against those investors that are always buying, between the 50% and the 61.8% Fibonacci retracement level. The 50% Fibonacci retracement level for the dollar yen is at 101.43. The 61.8% Fibonacci retracement level is at 95.47. Those two lines are highlighting the sweet spot trading zone. In my view, I will prefer, because I told traders years ago that the dollar yen is highly distorted. All right, it's highly distorted because of the market expectation that the Federal Reserve will put up interest rates a few years ago. People were busy pushing the dollar up against the yen. Another good news, my friend, if you are a forex trader, which I said to you before, you must check the economy news. In fact, do not trade forex if you don't check the economy news. Very serious. So recently again, we know that, there are also a lot of money being pumped into the Japanese economy. The stimulus, the quantitative easing is starting in Japan. So this is a devaluation of the Japanese yen. The policy, the monetary policy in Japan, it consists of devaluing the yen. All right. So we are talking about, all right. So if they are devaluing the yen, all right, and the Federal Reserve is putting up interest rates, or if they are devaluing the yen, and the expectation is that the Federal Reserve will put up interest rates soon, what will happen to the dollar yen? The dollar yen will go up, which means the US dollar will appreciate against the Japanese yen as they are devaluing the yen, and the Federal Reserve has stopped devaluing the US dollar and begin to put up interest rates, the dollar yen will go up. But as I already mentioned to you, the dollar yen currency pair has been distorted. You see how it's coming down very fast like this, boom, 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 down. In my view, all right, apart from the sweet spot zone, if you want to buy and hold the dollar yen, in my view, you do not have to follow me, or you can disagree, all right? It will be better for the dollar yen to pull back into the zone of 8799. So we will prefer it that traders and investors who want to buy and hold the dollar yen will buy it near the 78% Fibonacci retracement level instead of the sweet spot zone. It will be better to look for an opportunity to buy the dollar yen at the best price, 8799, which is corresponding to the 78% Fibonacci retracement level. I do not use 78.6%. I always use exactly 78% Fibonacci retracement level. Here it is. That's the line here. That's the level that I will consider oversold for the dollar yen due to the distortion that was accumulated between the end of 2012 and the beginning of 2015. There was a distortion which I talked about before. So in order to rectify that distortion, that exaggeration, it will be better for the dollar yen to pull back to the zone of 8799. That's correct. Okay, that's the level here we are watching. So what's the takeaway? The takeaway is that the Federal Reserve will put up interest rate in September, and that the Japanese monetary policy is to devalue the yen. So normally people should be bullish and buy the dollar yen. Good. All right. That's the takeaway. But we cannot just buy for no reason. The price structure will determine the appropriate strategy that we must deploy. So looking at the price structure, we have a rising channel, price break below the rising channel. We project the channel down. What we can see, looking at the price structure, the price below, the lower part of the projected channel is retested here. We can't afford to buy it in that condition. The only time that we will be truly bullish when it finds support above the level of 10600. Here it is 10600. That's the place. Breakable, retest, find a good support, and we can buy it if the economy news are not challenging us. Remember, the first week of the month is the most challenging week for forex day and swing traders. One can avoid trading completely from the 1st to the 8th of each month. One can also avoid losing between the 15th and the 20th of each month. I have recorded a video recently that I titled How to Improve FX Trading Without Doing Nothing. Have you watched the full length of that video? Hope so. If you did, that's very good. All right. So, looking at the calendar, all right, it's 28 today, all right? So tomorrow, Friday, 29. Next week, on Friday, we will have the non-farm employment change data. Okay, so that's the first week of the month, the most challenging week. But I've been saying this for years now, so I think traders that have been following will get fed up with me now. So that's okay, all right. But for new, I said it because for the new traders that are joining us, so they also may understand it. So they were not here that time, so they may know it. So looking at the calendar, next week is a very challenging week. All I will do is to put this on my bearish watch list until the 9th of August 2016. All right. So remember, when we are selling it now, we are trading against the general consensus, which means people want to buy the dollar yen on expectation of that the Federal Reserve will put up interest rate, on expectation that the Japanese will continue to devalue their Japanese yen. But we are also trading against those investors of forex traders or FS traders that always buy between the zone of 50% and 61.8% Fibonacci retracement level. All right. I already mentioned to you that because we have a distortion accumulated in this currency pair, it will be better for somebody who want to buy and hold the dollar yen to buy it at this hot spot trading zone, which is the intersection between the level of 8799 and the third projection of our original channel. Not the third projection, the second projection, correction, on the edge of the second projection of our original channel. So what is our original channel? That's the red channel. All right. Our first projected channel is between the red and the orange line. Our second projection, using the width of our original channel, is between the orange and the blue. So what I'm saying is that the best place to buy and hold the dollar yen is when the price reach this angle here, which is the intersection between the level of 8799 and the second projection of our original channel. It makes sense? It is also powerful. This is the end of this tutorial about the US dollar and FSD or swing trading strategies. If you have any question or suggestion, put it in the comment section, and in due course, I will record another video to answer your specific question. We are the TSTW 24 traders talking about US dollar and FSD or swing trading strategy. Happy trading to you all, and speak to you soon.